That was the news of the day this morning. We're buyers of stocks on Friday, but even stronger if the jobs report is soft. The implication being you're buying no matter what. So it wasn't soft. It was hotter than expected. But nonetheless, why did you come into today thinking you were buying stocks regardless?
Well, there's a couple reasons, Scott. The first is that I think markets are much more focused on inflation reports and CPIs next week and the June FOMC meeting on Wednesday. And the second, which of course we think is going to just show a continued improvement in inflation. But the second is that stocks really historically have done well in the week following the release of the employment report, rising roughly 70% of the time. And it implies roughly 70 to 80 points in the S&P. Of course, it would be better if it was a soft jobs report, and it wasn't.
Well, it's funny you say that. It would be better if it was a soft jobs report, because I think the market spent a good amount of today deciding, what it was. Was it good news is good news? Good news is bad news? I mean, if the market doesn't necessarily need rate cuts, why is a softer report better? Why can't we just be happy with good news? Labor market's strong, economy's hanging in, don't need rate cuts, and still may get them later this year.
I generally agree with you, Scott, but as you know, there's a faction of both market participants and the FOMC that view some of this data as too hot for them to be comfortable with. And I think, the more positive data points you get, the more you might actually start to see markets price in a hike. And so I think you're right. There is a Goldilocks window, but it's safer to say bad news is good news because those actually clearly take away inflationary pressures.
I'm wondering if you think in any way that, thinking that June is going to be the point of the year in which we start to get this money off the sidelines and into the market, and how Goldman Sachs framed it the other day, talking about a, quote, wall of money coming in, but not really until July, that you could have some selling between now and then, but that the beginning of the third quarter and thus the second half of the year is the area to really plan for a wall of money coming into this market and then pushing stocks that next leg higher.
Scott, that dynamic is certainly at play for a couple of reasons. One, April was a down month, and I think a lot of institutional investors actually sat out May thinking April was the start of a bigger correction, so June is when money starts coming back in. But I think more importantly, since the end of 2022, I think a lot of institutions and a lot of high net worth individuals sort of sat out this market saying, hey, I'm happy earning 5%. By the middle of this year, if the S&P is up 15%, on top of missing 30% last year, I think a lot of folks are going to say, listen, I can't just sit on cash and earn 5% anymore when I'm missing out potentially on a 25% year for the S&P.
Tom, what'd you make of the fact a couple times this week we had rates go down and stocks go down? Not exactly the dynamic that many had been expecting, right? Because that's not the way that stocks and rates have been reacting, right? They've been pretty well correlated. Rates down, stocks up. Well, there were a couple of occasions this week where that didn't work. Why?
It's kind of hard to tell, especially day to day. But if I had to guess, we don't want to be in a situation where the economy is slowing so much that we've actually hit stall speed, so rates would go down. That type of economic dynamic would scare stocks. So it's almost like bad news is too much bad news. In fact, maybe that's why today's jobs report kind of fits right in the middle, because it's actually good enough to tell us the economy is still strong, as you said, but it's not enough to actually add to inflationary pressures.
As Nvidia halves its shares, marking another milestone with stock splits in recent times, one can't help but ponder, is another split lurking just around the corner? More importantly, does this signal a long-awaited change in the landscape of AI-driven corporations? Join us as we take a closer look, dissecting what these movements could mean for investors and Nvidia holders alike. Welcome back, everyone, to Investocracy.
I have to stay on tech. I've seen you've written about Nvidia in the past. This is a week where Nvidia could either send the market to new highs or send it right down to the toilet. What say you on Nvidia? Do you still like the company? And how important is this one single earnings release from this company?
Well, it's important, but their guidance is even more important. And I'm on the record saying that you should hold Nvidia at the end of the decade because no one can compete with them and the regenerative AI chips. And then after the end of the decade, it might be more quantum computing leading the way. But I love Jensen. I love what he does. I think he's a great leader. Very few founders can actually run their company. And the only glitch I would say with Nvidia is the Citadels of the world write so many options on this stock. You got to realize if the stock gaps up, then Citadel has to pay out all this money versus just pocketing all the premiums they just collected. So sometimes the tail wags the dog when Nvidia announces. So if it doesn't go up a lot on day one, it'll go up in subsequent days.
You cover a lot of stocks, Lewis. So for you to call Nvidia the stock of the decade, and that certainly sticks out to me. You mean to tell me no one is close to Nvidia at all in anything it does?
No, there's Jensen gave a nice talk to Stanford Business School. My son was actually in the audience. It's that talk is on YouTube if somebody wants to see it. It's about 55 minutes. And they spent up to $2 billion per regenerative chips, and no one can compete with them on regenerative AI. So they have a monopoly. What's going to be happening by the end of the decade as they upgrade the Blackwell chip is you can only fit so many transistors on these chips, and they'll be approaching the atomic level. So obviously they can't go beyond that. And then the quantum computing is the only way you can speed things up after that. And they already have a quantum cloud simulator. They're working with Google on their quantum computing development. So that'll be the next phase.
Curious to get in your mind. So when you saw that DeepSeek news come out, hit the market, slammed Nvidia, I mean, are you just like, this is ridiculous? I mean, it's Nvidia. I mean, we need their chips.
Yeah. It looks like that was a plant by the Chinese Communist Party, because obviously the week before, President Trump had announced Stargate with Larry Ellison, Sam Altman, and the SoftBank founder. And the gentleman that runs DeepSeek is a hedge fund manager based in China, and they can't short over there. So if they want to short, they had to try to prick our bubble. But although DeepSeek was the number one seller on the Apple Store, it's been crashing a lot. They got cybersecurity issues, and so they got to expand the cloud in China to accommodate them. But the whole narrative that the old chips are just as good as the new chips, and we wouldn't have to expand the data centers, that's proven to be a false narrative.
Following times of exponential growth, a stock split is like nature's way of saying, let's not all pretend we can afford this. In 2021, Nvidia performed a 4-for-1 stock split, making it more accessible. But as is typical in this volatile landscape, yet another leap was on the horizon when by June 2024, after Nvidia's technology-powered tools like ChatGPT, a 10-for-1 split mirrored its stratospheric rise, a growth trajectory that saw a mind-blowing 14,000% increase since 2007. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
What would you compare, I guess, the market's, I want to call it obsession. Well, I will. Obsession with Nvidia. Is there another stock that you've covered over the years that has captured the zeitgeist in markets like Nvidia?
No, it's a monopoly. Everybody loves a monopoly. I think I've only had 5. My first one was Conair, which was hair dryers in the 80s. I guess everybody had a big hair, and that lasted for a few years.
I think they're selling those things for $2 in CVS now. Yeah,
that's right. Then we had Tyson Foods, which figured out a new way to eat chicken, because in the 60s, there was no chicken chunks, even in the 70s, or chicken tenders. They supply McDonald's with McNuggets. So Tyson had a nice little...
Still unclear what those McNuggets are, Lewis. Keep going. Still unclear.
Exactly. Well, that's their chicken essence, I think. Then we had it was Hanson Natural, which had Monster Energy, renamed itself. I still remember I had the Red Bull guys in my office because I had a friend with an IndyCar team, and I remember drinking this stuff, and I said, well, this is horrible. And I didn't realize I was supposed to be in college putting booze in it. But anyway, obviously energy drinks were incredible, and Monster was a big winner for us. They had the monopoly in the Americas. Red Bull was Europe. And then this is our second time in Nvidia, but we've been in it now for over 5 years, and the second time around, and I have no intention of selling it.
What? What would make you sell it? And if I had this right, I mean, you've been in Nvidia in some capacity since May 2019. I mean, so you really kind of got in early on this freight train that is Nvidia. I mean, how do you know?
Yeah.
How do you know when there's just no more gains or the gains are going to slow down?
Well, we score stocks. So when margins come under compression and earnings aren't growing faster than sales, that's a warning sign. And then but basically what it is margin expansion creates a lot of the earnings surprises. You want positive analyst revisions. The analysts are notorious for underestimating. And so while the stock is being institutionalized, you just want to ride it as long as you can. But I don't have any company with operating margins as fat as Nvidia. They're 70% operating margins.
To feasibly embark on another 10-for-1 split, Nvidia would march towards an astronomical $34 trillion market cap. To put it into perspective, no stock has even sniffed at the $4 trillion mark, let alone the stratosphere where $34 trillion resides. Therefore, expect Nvidia to break through its current valuation and exceed expectations as usual. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Nvidia is one of the cheapest AI stocks, at least on a PE basis, trades at about 29 times forward earnings. I can't figure out why it's so cheap, but is it because, I guess to your point, analysts have not marked their estimates quick enough on this company?
Well, the bigger you get, the harder it is to get a high PE. The PEs eventually do go down as you get in the multi-trillion-dollar market cap. But the cheapest out there, of course, is Supermicro, which is the Nvidia, a cloud supplier. They make the best rack systems. Of course, they have to announce their financials on Tuesday. It's been one of the better performers this year. But it looks like that there's been a lot of short covering in that stock.
Some of the folks that I've talked to, Louis, suggest that Nvidia, they're going to beat big when they report, or likely to beat big, but they could offer a little bit of a disappointing first quarter outlook. Do you think that sends the market into a tailspin?
No, but the problem is the order backlog is big, okay? And if they can't fulfill all the orders, okay, it just gets added to the backlog. And some of these companies, I'd pick on Supermicro, which obviously use the NVIDIA chips for their rack systems. That company has a 4 to 5 year order backlog. And that starts to confuse Wall Street. Like, why can't you deliver? And obviously, there's only so many of these Blackwell chips that can be made in Taiwan.
So, what future awaits Nvidia amidst the strategic moves and whirlwind sessions on Wall Street? As it stands, Nvidia dances with tremendous potential within the embodiment of AI and technological advancements. Yes, the echoes of another stock split appear faint for now, yet standing at the precipice of technological revolution, Nvidia might just do the impossible. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.